journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, we did have a new trade today, and that was in the crude oil. You notice that we made a 382 retracement of the high last week, right on the money. It's broken just about $1,000, and it's had a little tiny bit of another 382 rally earlier today, but under no circumstances should that ever go to a loss now. So you should have your stop at the very worst, break even, and there's a potential here, of course, for the market to move down quite a bit because, you know, we've gone from 66.20 to 61.20. That means $5 lower than that. We could be trading in the 50s in crude oil. If we break, well, that's not much to say. If we break 6,100, we could be at 5,400 in crude oil, and we're going to find out whether that's going to happen very soon, but we'll take a look at that. Now, another one that we were watching very closely here today was the Treasury bond market, because if you remember, we had that big move here in Treasury bonds last week. You'll see we had this 382 pullback right there. We'll just draw that in so you folks can see it. There's where the pullback occurred, right at that spot right there. We were looking for it to possibly come in here this morning, and we didn't quite get it. It just missed this one here by just a hair's breadth, I believe. Let's just double check it just to be sure, because I haven't updated as of yet. Just a second. Give me 1 second here, and we'll try to get this thing to work. Yeah, see, it didn't even come close to even doing that. But as you look at this on the longer term picture on the daily, you'll see here we're very, very close here to the big target up here, which is 117.22. So far, we've been as high as 117.11. And so we could easily get up to this level. Now, with this strength of coming out of point C, we could actually go a little bit higher. So be careful. And you'll see the same thing in the Treasury notes when you look at those. You see we're almost ready to take out the highs of April. Just for kicks and giggles, let's just check and see if that happened in the old Treasury notes. Just give me 1 second. We'll get those up here for a second, and we'll be able to take a look at those, get the long-term daily up on that, and see if they took it out yet. By golly, did they ever shut the front door and raise the rent? Look at Treasury notes are actually even moving faster. Oh my gosh, I don't trade notes very often. This is, wow. Thanks for bringing this to my attention, folks. Okay, there's our move. You can see we just made that ABCD and we took out that level. You see, we shattered that level from way back here. This is a sign we're up against some major resistance up in here, folks. This is where you want to be thinking of selling Treasury notes. You notice the bonds have not even taken this out yet. And here was where we are with this one right here. So this is a very interesting picture. Just looking at this, wow, this is telling us something here that this is either going to turn right here. We're going to be looking at some break in rates here, but how that's going to happen doesn't surprise me. But as you look at this, you'll see we now have a three drive pattern forming. There it is right there at the exact 1.618 expansion of that. Okay, so this should be it in the Treasury notes. So we have to watch that very closely. A big difference between this and the bonds. See, the bonds have not even taken out that high yet, but this one has. That's telling us that something is pretty exciting happening as we look at that right here. See, the bonds have not taken this out, and we shattered that in the notes. So that's telling us the bonds are the weaker. So if you're going to sell something, sell the long term. Don't sell the short term. So let's look at it one more time. There's where we are. We got up to this level right here. There's your ABCDs on the way up. The target we were looking for on this was 117.31. We got to 117.11. So we missed it by about 16 points. Now the Treasury notes went above this level. So that's telling us that shorter term paper is in demand more than the long term. That usually means inflation is just around the corner. Okay. Now we have one other trade that let's just take a quick look at some of these indices, because I know you've already seen them with everybody else that's been on the air here. But what we did last night, we had the big break here on Friday, stopped right at the 50% retracement. The rally back went just a little above the 618. If we take this out, folks, well, it's time for the old cowboy to get back to using something other than ABCD, and that's going to be a hard thing for me to do. Now, if we look at the Dow Jones, we'll just get this out of the way here so we can see these things one at a time, hopefully one at a time anyway. There's the Dow Jones. It's going to be right here. As you can see, the Dow Jones had big moves. See, we went up to the 50% level twice, pulled back to the 7.8, back to the 50%, and that's what it's done so far. This is a big move, folks. We went from 58, we got 600 Dow points, rallied back 300 of that, right to the 50%, hit it 1, 2, 3, 4 times, and now here's where we are right now. We're seeing the same thing pretty much falling together in the euro. And the Russell, just a second, folks. There's the Russell today. We pointed this out in the video. We made the ABCD last night at the 78% level, came down, stopped right at the 618, back to the 618, and here's where we are right now. So the jury's still out on this. You can see the NASDAQ was really strong earlier. We've given a little bit of it back. We didn't quite take out the Friday high. It didn't get up to that 2,900, missed it by about 100, missed only by about 12 pips, but now we're 100 pips under that. So it's still slightly bearish, but boy, only slightly bearish. By the way, we did have a total lunar eclipse yesterday. It was in several parts of the eastern hemisphere, not around us. And then on the 22nd, we are going to have a partial solar eclipse of the sun. Partial solar eclipse of the sun is going to be on the 22nd, which is also the autumn equinox, and that means winter is not very far away, only about 3 months away. So we got some cool weather coming in, and we'll see how that's going to hold out. Okay, now let's move over to talk just a tiny bit about the gold market again. I want to spend some time, because I did a great deal of long-term work on this, looking at the long-term monthly, folks. You can see here, this is where back in 2001, Tom O'Brien came on and said, it's time to buy gold. And it was at $232 an ounce. It was in 2001. From there, we went up and we took out the highs of 860. That was from 1980, and that was at 1,020. Then we backed off to 560, which was a 61% retracement. Then in August of 2011, we doubled the price to 1937. And in 1937, I was in Hong Kong being interviewed by a couple of newspapers, Wall Street Journal and Hong Kong Daily Times. And I said we were at a major top in gold, and I expected it to see drop at least $1,000 an ounce down to 1,900 or to 1,000. It got to 1,063 in December of, 1,037 in December of 2015, and then from then we've gone to where we are. High today has been 36.84, something like that. What was the high? I can't even tell. 36.85 so far has been the high. I put these rates of change up. That shows you how the market has been following these rates of change for quite a while. So it hasn't really done anything different, but the top is not in sight yet. We thought it was there, but it's not. Let's take a little break. 877-927-6648.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Okay, folks, this is a TLT, which is the ETF iShares for the 20-year Treasury notes. As you can see, it's the same chart. It just has a lot of gaps in here because of all the stuff that happens overnight. These don't trade overnight, so that's why you have these gaps. But we have a bunch of ABCD patterns that are forming here, and just like we showed you on the notes themselves, there's the ABCD measures to right about where we're trading right now at 89.53. The high today has been 89.55 so far. Now we have another ABCD right behind that that would be a little bit higher. You put that in, and you see that one comes in at 89.63. So we have two major patterns up here. The 618 is also at 89.94. That's over the last 6 months. So we're having a really strong rally in here. This is related to Federal Reserve stuff, I guess, assuming that rates are going to drop, and that's certainly a possibility, but that's the pattern that we're looking at right now. This is the time to buy this thing, not up in here. At this bottom right here, you had a 135 pattern. You can see, let's just draw that in so you folks can see it. There's your 135 pattern lined up right there. There's your pullback at 786. There's your pullback just below 618. And here are the targets on all of these. So this is the wrong time to be buying this unless it goes straight up. And of course it does, then that's the way it is. There's nothing else you can do about it. But that's what we're watching as we're looking at this. Since we're watching the notes, let's just take a quick look at them again on the future side, so you'll be able to see it without the gaps. And that'll be one that will be interesting to watch. There it is right here. All I have to do is get the daily up. Okay, here's where we are. We just had it up here. All I'm going to do now is to draw the patterns in there. You can see the 135 pattern forming right here. Get that out of the way. Clean this out so we can all see it together. Okay, here's where we are. There's your 135 pattern coming in here, and here's the ABCD. Now this is the actual 20-year note, folks. This isn't the iShares or TLT. See, there's your pattern up here. We've already gone above that, all right? And which we should, because this is the real deal, all right? And the second one's come right up to almost the exact top right up in here. So that's what we're watching right here. And this is where you'd want to be looking to be a seller. Been rallying for June, July, August, and September, 4 months. And here's where we are right now. That's where we should stop. Now, does that mean we're going to stop there? Of course not. It just means that we could stop there. So that's what we're paying attention to. Remember, folks, back a long time ago, when there was Santa Claus and stuff. Well, it doesn't show this because this is December going back to the month. You remember back here in 2020 when they were telling us about negative interest rates and how wonderful it was going to be. You give them the money and they're going to keep it for you, and they're going to charge you a fee, and they're not going to give you any guarantee. How many people bought that thing? And then you can see here, we sent from 140 all the way down to 104, and here's where we are right now. In fact, all we've done so far on the ABCD front is make this little tiny 382 retracement here in July of last year at 2024. So interest rates is not where you want to be, in my opinion. But again, opinions are like armpits. Everybody has one, and you know what that usually smells like. Let's get that, especially after a workout at the old gymnasium or whatever. All right, we got that one out of the way here. Here's one that I'd like for you to really keep your eye on, and that is this euro trade. We've got something really interesting happening in the euro. Let's get this up here. This is the daily chart on the euro. Now, we know what's been going on with the dollar and all that stuff because of the strength in the gold market. You'll notice here that we have an ABCD pattern completing here just a little bit higher. Now, we haven't even taken out the highs of Friday as of yet. We came within a few pips, haven't done that. But watch this number here, 17770. That's going to be interesting, like this one right here, okay? Because it's taken almost 2 weeks to get to this level, and it's not screaming ahead. That tells us that the market is slightly, possibly weakening. If we look at this on the hourly chart, you'll see that went up to the top, tried it, backed off a little bit, stopped exactly where it should have. You can see there's your pullback this morning. And if that's really bullish, where should it stop at? The exact 382. And where did it stop at? You guessed it, right at the exact 382 retracement. So that means we're still going a little bit higher, but when it gets to that level, that's where the level should really have a reaction from. Now, if it doesn't, that means the US dollar is going to get really weak and gold's probably going to go up even more. But that's what we're paying attention to when watching this currency unfold like this. And also, in conclusion, when we talk about things that are crazy, let's get up here. We're going to take a look at this wheat one more time because I'm still believing that people are not going to stop eating cookies, candies, pasta, and bread. And we're going to take a look at the December wheat one more time. And it's up today. And what we were trying to do is, you can see we've had this market come down and backed off. I'm trying to buy it one more time if we make this ABCD here, right here. And the reason why I'm giving it time is because we have this total lunar eclipse going on right now. And of course, it's up a little bit today. And then we have the solar eclipse coming in on partial solar eclipse coming in on the 22nd. So somewhere down in here would be the ideal place to buy it, especially if it got to this price right here that we were just looking at. And it's only a few cents away, so it could easily make that. Just the slightest bit of bad news. You'd be buying it at 5 at 12 is the number. It's at 522 right now, and your stop has got to be $4.99. You're going to be becoming a farmer for the price of $500, and that means you got your tractor, your seed, your insurance, everything covered in that. And if you can get out of the farming business when it hits that price, you've only lost $500. The farmer, he doesn't have that much choice because he's in till the crop comes in and the crop goes out. He's stuck. But a futures market, you can get in and out at your own pace and not worry too much about it. Now, we've taken out the low of yesterday, plus we've taken out the high of yesterday. Hasn't gone very far, but the fact that we were able to do that was a surprise, given the fact that the market had been down for 7 days. So there's a bottom coming in here. I'm not sure if it's going to make it one more time, but if I miss it, the market has a big move, then we know what to do, and that is we'll switch over to, plan B, and that'll be to look at the first 382 retracement, and that's what we'll be looking to buy. We're not going to miss this, but I've got on my watch list that this is what I'm watching to see if we finally get to that point, okay? That's the main reason why I'm watching these so very closely. Now, we're going to have Jeff Hughes as our guest coming up here. Tomorrow, we're going to have PT Webb. Paula Webb is going to be our guest. On Wednesday, I believe we're going to have Bill Cerubi on from Cycles Research out of Vienna, Austria. And Thursday, I think that's open. And Friday, we have our live trading day, which is always exciting. That'll be from 9 until 12 on Friday. And that'll be a lot of fun, especially given the volatility that we're having now. Boy, this volatility is just tailor-made for up and down swings, folks. And we're seeing a bunch of those as we unfold here so far this morning. Let me get the clock on the wall here to make sure I've got enough time here. And then we're going to have Jeff Hughes coming up at the break here. 51 seconds, my goodness, that's 2 lifetimes. I know everybody wants to take a look at Apple. That's always the one. Here's Apple. Here we are, probably up today. Actually, Apple's down today. That's hard to believe, isn't it? Wow. Apple is down a little bit, not too much, but it is down a little bit. And then, of course, Tesla, which should be up big, given I heard news that it was something positive happened to Tesla. But again, I don't follow this stuff. And we'll be right back and we'll have Jeff Hughes on. Stay tuned, folks.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, folks, good morning. We have Jeff Huge of Alpha Insights, and he's telling us that silver and gold have quadrupled the yearly return on stocks. Boy, that's an amazing number, Jeff.
It sure is, Larry. Hey, thanks for having me on the show today. It's been
My
a minute,
pleasure.
hasn't it?
Yeah, it's really mind-boggling when you see it there. It's really quite spectacular.
Yeah, and in fact, foreign equities have also doubled what the S&P's done year to date. So that should not be lost on folks either, as has Bitcoin's almost done that as well. And I think the bottom line here is that non-dollar is really outperforming dollar-valued assets. And we can look down the line and just see how poorly some of the secondary and value stocks have done. You know, I think small caps are underperforming T-bills year to date. So everybody's all excited about small caps again for some reason. And I just don't see that changing.
Well, I'm looking at this next chart and my jaw just dropped. I thought I had the TMJ back, but oh my God, we're 3 times the height of the dot-com bubble right now.
Yeah, it's amazing. A lot of people are waiting for the blow off top. I can't believe that they're still waiting for it. What are they waiting for? We're 3x what we saw back in the at the dot-com bubble peak in terms of the move that we've had off of the lows, or where this tech 3.0 actually began. And so, you know, I think this AI bubble is probably close to bursting. I just actually heard Dan Niles say that he thinks it's going to last until around Thanksgiving. He's a tech expert, for those who don't know the name.
I know his clothing haberdashery guy. Anyway, listen. One question I had to ask is when you look at these figures like this, I have not seen a chart like this before. I mean, I look at a lot of different things as far as expansions and stuff like this, but this is going back over 50 years.
Yeah, it is, and there just hasn't been anything quite like this.
Wow. Holy cow. Well, it should be. It's a 15-year bull market. It's been the biggest bull market in the history of our country. So how much it's going to go? Maybe it'll be Thanksgiving, Christmas, or spring. Who knows? But anyway, that's an incredible chart, my friend. I really laud you on that one. Now, here's NVIDIA. It looks like it's under a tiny bit of pressure right now.
It is. It's up today a little bit, but, you know, we've taken out that neckline here. And for those of us who spend a little time, you know, admiring technical analysis for what it's worth, there is a visible head and shoulders type top pattern, or a variety of a head and shoulders top that looks fairly evident here. You know, NVIDIA's price actions taken out both the 10-day moving average and the 50-day moving average, and it's holding below those. Now looks like the 10-day exponential is about to cross through the 50-day to the downside. That's never a good sign. And if we look at the bottom panel of this chart, we can see that, you know, multivariate momentum, that's momentum over several time frames, is all decisively going low and actually negative now. And so, you know, to my way of thinking, the head and shoulders top pattern projects to around 144 to 150. We've chosen the midpoint of 147 as a target, but a secondary target would be the 200-day moving average. That comes in around 139 or so. And so, you know, I think there's considerable downside to NVIDIA.
Okay, next one we're going to talk about inflation turning up, and I never thought it turned down, actually. So anyway, what are we looking at here, Jeff?
It's never reached the Fed's target, to be sure. But, you know, recent reports have shown a reversal in the directional move of inflation. So we saw, you know, inflation topped. It's the white line in this chart. Is the current iteration of what's going on. And we peaked back in 2022, in the summer of 2022, around 9%. And it's been coming down, but it's been rallying off of what looks like a double bottom. And, you know, the most recent report, which was the July data, which came out in August, showed core PCE, that's ex-food and energy, up 2.9% year over year. The core CPI, which came out the week before, confirmed that. That was up 3.1% year over year. But really the most important part was the core PPI. That's the producer price index. That's all the inputs that go into manufactured goods, et cetera. And that was up 3.7%. Now, bear in mind the Fed's target is 2%, and they are committed to getting to 2%. By my way of thinking, it's very difficult to justify a rate cut in an environment where inflation is pushing back up and core producer inflation, which is, leads consumer inflation, is pushing up significantly above their target. And so this looks to me like we're setting up for kind of a replay of the 1970s where we get a third wave of inflation that carries to new potential highs. Could it be double digits? Could it be 10, 11, 12, 13%? I don't know. Nobody knows. But we do know that the money supply is at a new all-time record high. We've got a weakening of the dollar. We know that we've got a 7% fiscal deficit. And we know that the big, beautiful bill is a spending, boondoggle. And so if the Fed's going to cut rates too, I think you've definitely got a situation where inflation could run out of control, at least for a short period of time.
Wow. Okay, this next one is loan delinquencies. Boy, that's a scary, especially that student loan one really looks a little scary.
Yeah, it just spiked up. And the reason it spiked up like that is because they just hadn't been reporting it. And so suddenly now student loans are being reported. And, we're seeing that this, delinquency rate is now, well above 90 days for 10% of borrowers. The total amount of student loan debt is now in excess of 1.6 trillion. So you got 160 billion that is, greater than 90 days delinquent right now. The other one that's important is credit cards. We got about 1.7 trillion in credit cards right now, and that's about 12.25% of credit card borrowers are behind on their payments by at least 90 days. And the last time we saw something like that hit was back during the GFC. And actually, autos look just as bad. Autos are about 5% of loans are delinquent. That's where they peaked back in the GFC, the Great Financial Crisis. So we're getting to levels where consumer debt that isn't backed by any tangible assets are reaching levels of delinquency that suggest that we're in, a severe recession already. And so, that is something that justifies a rate cut. But at the same time, you've got kind of this inflationary backdrop where we could potentially see significant stagflation, no growth or negative growth with high inflation. And that is a recipe for disaster for risk assets like stocks.
This next one's interesting because I had a question about this. It's construction quits. I don't know if you follow the price of lumber, but the price of lumber's dropped in half in the last 5 weeks. Are you aware of that?
I am.
Okay, let's talk more about this when we come back. Jeff Huge, Alpha Insights, folks. Stay tuned.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, we're back with Jeff Hughes, Alpha Insights, looking on quits in construction. What does that mean, Jeff?
You know, construction's the most cyclical industry in the U.S., and it's one of the highest employing industry in terms of numbers of employees. And so what tends to happen is you have a very high quits rate when things are good, because they're like, people are jumping from job to job. They're like, I can get paid $25 an hour here, or $28 an hour there, or $50 an hour here. And so they're chasing the dollar, right? Well, when the quits rate drops, it means nobody's changing jobs. It means people are trying to lock in where they're at because the number of jobs and projects is declining dramatically. And so to your point about lumber earlier, you know, when there's no demand for lumber, it crashes, right? Well, why wouldn't there be a demand for lumber? Because there's no new projects coming on. And so what's happening is construction workers are being laid off, but they're not quitting to go find a better gig, right? So this is usually what happens right before a recession. And it's a little known leading recession indicator that I wanted to bring to everyone's attention.
Okay, and then here we are talking about the Elliott wave.
Yeah, you know, our preferred Elliott wave count really looks back to the 2009 low. And this is a very big picture, you know, 16, 17-year move. Last time I was on your show was July 25th. And at that time, the S&P was right around, say, 6370 or so. And I thought, you know, I put this target up, 6425 to 6550. And I said, I think over the next couple of months, we could squeak out another couple hundred points. Well, we've gotten to a high of 6532, just below the upper range or upper boundary of my range, and right at the upper boundary of what I see a kind of a converging ending diagonal wedge here. And it's kind of a textbook pattern. We put an inset in there so your viewers can kind of see what that looks like in the textbook. And what it's saying is that, you know, once we kind of, you know, terminate up around this upper boundary, things should reverse hard down. And, you know, if we were to just retrace 61.8% of the entire advance over the last 17 years, that would carry us back to about 2,900, which is right on par with the 200-month moving average. And I think that's a good target for the first wave down of an ABC corrective pattern. I'd call that wave A. You know, shorter term, if you forward to the next chart, we've been following this whole move off the April 7th low. And that move is kind of traced out a parabolic arc. And we're looking at it here on a 130-minute range chart. And that chart looks like it's peaked out. This final, small degree fifth wave traced out. Again, another kind of converging parallel trend channel or converging trend channel. We call that an ending diagonal. And it's a terminal pattern. And if last Friday's high, which was that 65.32 level, was the high, then we should be looking forward to a pretty big move to the downside here going forward. And I think once we take out the 50-day moving average, which comes in around 63.22, that'll be pretty good evidence that the S&P 500 is poised to really reverse this uptrend.
Okay, now here's the next part that I'd like the folks to look at, folks. He's got a bifurcated way of looking at these markets. He looks at the stock separately than what he does the overall market, and your stock selection is absolutely amazing. So please tell the folks what your open ideas are and how your trades are working, because look at that, folks. He only has the one small loss in GSD, but all the rest of them are just being bonkers. I mean, this is fantastic, Jeff.
Yeah, so this is our
28% annualized. That's amazing.
Yeah, this is an ETF portfolio that is based on our Idea Generator publication that comes out every Wednesday. Subscribers to our newsletter get this letter, and basically it gives you complete instructions on what to buy, what we're buying, why we're buying it, and what level to enter, what level to exit. We've got a pretty good track record. If these gains hold, this is from a few hours ago, we updated the performance, but, it's a snapshot in time here. These trades tend to run anywhere between 1 month and 3 months. It's a swing trading strategy. And, we're relative strength traders. And so we're basically looking inside of the market to find out, well, what's going up, and let's try and capitalize on those moves, regardless of what the market's doing. Now, we also have a strategic portfolio. It's kind of more like a tactical asset allocation portfolio. We call it the perfect portfolio. And the next chart kind of indicates the performance of that portfolio. It's really, about 25% equities, 25% bonds, 25% cash, and 25% alternatives. Now, those alternatives can range from, say, gold and silver, mining shares. We've used Bitcoin and Ethereum in there. We can also own, a variety of different other commodities or REITs, real estate as an alternative. But we try and do something that's uncorrelated to equities in that category. Well, it's been carrying the ball, this year. And in fact, this portfolio has been positive every single month through the end of August, and is up 17.7% year to date through the end of August. It's actually up 20% through midday today. This compares to the S&P, which is up around 11% or so. So we're basically outperforming the S&P by, say roughly 700 basis points or 7 percentage points. And, that adds up. And this portfolio has been one that's compounded wealth very nicely over the past number of years that we've offered this to clients. And all of the selections are detailed in our newsletter, which we publish every month.
Well, it's a beautiful newsletter, I can tell you that, folks. You ought to take at least look at the sample of it. But I loved your description of the Titanic and everything. He wrote an expose, I guess, on the Titanic that you folks ought to really log on and read it, because it was really an incredible. In fact, I challenged Jeff. I said, you got to get this from AI. And he said, no, I did it all myself. But it was really a blow-by-blow description of the Titanic. It was really interesting to me. So I think the folks would really enjoy it.
Yeah, Larry, I was in Belfast and went to the Titanic Museum, and I bought a couple books there while I was there, and I read those books on the plane ride home. And so it really inspired much of the work that I did for that. But, we published this newsletter. It's a macro newsletter. It looks at big picture, economic issues, geopolitical issues. We do a deep dive, analysis of equity markets, not just the S&P, but all of them, global and U.S. We look at commodities, rates, housing and real estate markets. We look, at crypto, and we kind of come up with ideas that, we think are going to drive performance based on this analysis and relative strength analysis as well. And we compile a portfolio, again, called the Perfect Portfolio. And we present that every single month. We charge, it's basically $180 a year. That's $15 a month. But right now we'll do a special rate for TFNN viewers only. We'll do it for $99 for 1 year. So if any of your viewers are interested, they can send me an email or go to my website. You can always find the newsletter at hugeinsights.substack.com.
Jeff, thanks for joining us. We'll have you on again soon. A lot sooner than July, I can promise you that, my friend. May God bless.
Thanks, Larry. Have a great one. Bye-bye.
You bet. We'll be right back, folks. Stay tuned.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hey folks, I've copied this one chart from Jeff, this AI bubble 3 times the .com bubble, which was way back here, believe it or not. Anyway, this alone should scare you folks. Just be really careful up in here. I know I'm a little early on this market, but that's my opinion and going to stick to it. If we make a new high than we did last Friday, if we get above 35 in the S&P, then I have to reevaluate, but not for more than one day, I don't believe. Anyway, that's what we're looking at here. When when this does hit, folks, it's going to hurt really, really bad. A lot of people that are not familiar with how these markets can come down, because when they do drop, they drop a lot faster than they go up, because fear is a greater emotion than greed. And believe me, it's not easy, because people see the market goes up, everything's wonderful, they have the euphoria, and when it starts down, they think it's a good buy here, a good buy there. And folks, I've been through those good buys. It's good buy house, good buy car, good buy boat, good buy wife, and you never know where it's going up. So just make sure you protect yourself and use some type of a stop, because if you don't, you're going to get caught in something like this. And this is history, folks. This is going back 55 years. And well, if you go back into the 50s, it is 65, 70 years. I've lived through all of those. And all I can tell you is be careful up in here. It's not as easy as it looks. We're seeing some signs of it, but not great deal of signs yet, but they're coming. And when they do, we're going to be there. That's all I can tell you. I can promise you that. Well, within limits, I can promise you, of course, but that's what we're watching. Now, tomorrow, we're going to have Paula T. Webb as our guest. And please live every day in an attitude of gratitude, and may God bless, and try to do something nice for your neighbors, folks, because it's not easy for a lot of folks out there. It's best that you share the wealth. That's what I've always been taught, and that's what I live by. So we'll see you on the flip side tomorrow, and may God bless.